The main catalyst for financial markets today is the outcome of the ECB policy meeting. The European regulator is widely expected to begin the cycle of monetary easing. Yesterday, the Bank of Canada announced the first rate cut. After 11 months of keeping the overnight target rate at the record high, the Canadian regulator cut its level by 25 basis points to 4.75%. If the ECB follows suit today, it could entail sharp swings on the technical charts. The single European currency was able to slightly strengthen its position yesterday, as predicted by our analysts. Our experts referred to a possible decrease in the producer price index in Europe and the cooling labor market in the United States. That's exactly what happened. The annual PPI increased from a minus 7.8 to minus 5.7%. The ADP employment report showed that the U.S. private sector added only 152,000 new jobs in May. This figure is much lower than the estimated 173,000. Besides, the April data was revised to 188,000. However, the likelihood of the Fed Reserve cutting interest rates in June and July remains low. According to the FEDWATCH tool, forecasts of a rate cut in September are already around 60%. In November, the market foresees an 80% probability of a rate cut. Yesterday's reports on business activity in the United States service sector were not in favor of an early rate cut. The PMI soared to 53.8, to the highest level in the past 9 months. Moreover, it greatly exceeded the estimated 50.8. The data points to recovery in the service sector after its contraction since December 2022. These indicators revived the positive sentiment on Wall Street. As a result, the S&P 500 notched its 25th record this year. The index closed yesterday with a 1.2% gain and also opened on a Thursday higher in the range of 5,297 to 5,354. At the same time, sluggish employment in the U.S. private sector poses a threat to the possibility of the U.S. labor market. So, tomorrow's no-farm payrolls may not only upset Wall Street, but also have a significant impact on the dollar's position. On the other hand, growing business activity in the service sector gives Greenback fresh impetus for growth. Driven by these contradictory factors following yesterday's roller coaster ride, the US dollar index relative to the 6 major rivals consolidated in a range of 104.00 to 104.30 on early Thursday. As a matter of fact, in all economic reports, markets are trying to find an answer to the question, when will the ECB begin cutting interest rates and the euro will go down? The main driver of the euro's dynamic is, of course, inflationary changes. In this context, the ECB board is facing a challenge today. On the one hand, ECB policymakers have repeatedly stated that the regulator is ready to cut the refinancing rate in June. On the other hand, the recent inflation acceleration as well as yesterday's report on a hot factory inflation do not exclude the option of maintaining the policy settings at the current level. Of course, this scenario will hardly come true, but it creates intrigue and contributes to the strength of the single European currency. If the European regulator lowers interest rates, which is the most likely, we will see a rapid nosedive in the euro against the US dollar. Today, in the first half of the day, the euro-dollar pair was trading close to the critical resistance of 1.09. At the same time, let's not forget that recently this level was already broken through by buyers. Although technical analysis plays a secondary role while waiting for news from the ECB, in this situation, traders are still focused on the upward cycle. For this reason, if the instrument settles above 1.09 today, this may indicate an increase in buying activity of the euro. Otherwise, the euro-dollar pair will again get stuck in the usual range of 1.08 to 1.09. Oil prices were finally able to make the long-awaited rebound. The BRENT price surged by about 2.5%. At the same time, crude oil remains to be oversold and creates the preconditions for a new price decline to around $77 per barrel. On Tuesday, the oil market closed in the red for the fifth session in a row. Therefore, the growth of Wednesday and Thursday may well be a temporary rebound from oversold levels. Moreover, data published yesterday by the US Department of Energy showed an increase in the crude oil inventories by 1.2 million barrels. In addition, trading in the oil market today is largely tied to the ECB policy decision. If the regulator cuts the refinancing rate, the US dollar will receive a strong impulse for growth. Given that greenback and oil are traded in inverse correlation, the strengthening of the American currency will enable a slight decrease in oil prices. You have watched the review of the global financial markets for today, June 6. Keep close tabs on the markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer your questions. Thank you for watching and see you online tomorrow.